Hello, hello, hello. Happy Thursday already. How's everyone doing? Good morning, Daniel. Yeah, we did make a huge move yesterday. Good morning, Sterling. Good morning, Patrick. Oops, good morning, Patrick. I don't know. There we go. There we go. Uh, it's interesting because, Sterling, thanks for putting that in. That was really the only thing that was somewhat interesting this morning. But TradingView has it as a miss. That's where a lot of times, and I know you get it from a different source, but it's just strange. Why, you know what? I'll have to look into that more. Thanks for putting in the inflation stuff. Finally, a drop in inflation and some actual a month over month deflationary print. So, Amazon, see, I saw this. I haven't, well, there wouldn't be. There'd be the next round of goods that come in, especially from China, if there is going to even be goods coming in from China. Think sellers will pass costs on to customers, will pass a certain amount of it. Yes, Richard. Good morning. Secondary moves are live. Good morning, Jacob. Hey, Harold. They'll do everything we can to keep prices low. Well, we will see what happens. Americans need to make over an annual income of $117,000 for a civil home for sale. Yeah, which they do not. So that's why it's a problem. Good morning, Options 22. How are you doing? Is this 3 days in a row? Options 22? Good morning, David. What else do we have? Oh, I'm not seeing and shelter inflation is still up 0.2%. What else? Rent inflation up 0.3%. Good morning, Tony. Hello, Charles. Good morning, Heinrich. No, the market's completely shrugged off the CPI. Good morning. What was interesting is I wanted to take a look at what the 10-year did. Good morning, Royal Palms. Dollar Tree is increasing. Now it's going to have to be, pretty soon it's going to be $2 Tree. $2 Tree. Well, thank you for coming back in, Options 22. We missed you. All right. Hope everybody got to take advantage of maybe some double patterns yesterday. Remember, they did trigger on the 1 hour right before. This is where, that did trigger in the S&P. Then you had the launch, and I said this could be possibly rolled into, unless you had resting orders to get out, this was such a rocket ship move on Trump pausing the tariffs on all but China that I said it could be rolled potentially into the daily. And look at where we hit. We hit the first target. We hit the prior key breakdown level. If I switch to the weekly, we hit our key breakdown level right in here. We're still against the weekly rotation zone. We're still against the daily rotation zone. Not surprised to see a pullback here. But in the short term, remember, we were incredibly oversold on the weekly. All right. We're still got cycles finally turning up on the weekly. We could easily return to 2 more targets higher. Easily. So, what am I watching today? I'm watching for this pullback with the 4-hour rotation zone. We have a pretty big support window. All right. These are the candle bodies that helped form the bigger daily double. This is the bottom of the rotation zone. So, I know this is a wider window. My first key level of support, you see this little support ledge right here. You see this support ledge right here. Okay? That's the first level I'm watching. If we break below that, I'm watching this other line. I put it in closer to 52.80. But anywhere in here, back on the 4 hours, I'm watching for. If we do pull back, it doesn't have to happen today. Might happen tomorrow. I didn't even go through this other. Hold on. Did I go? What's coming out tomorrow? Oh, so PPI is coming out tomorrow. So tomorrow, with the CPI information, did I skip this? Did I skip all this? I did skip this. So today, we have the inflation rate dropping. I did skip this. I got straight to the charts. I was so excited for the charts. So month over month, core inflation coming in at 0.1 versus 0.3. This was deflationary month over month. The headline inflation, actually deflationary print. So we had initial jobless claims coming in at 223, prior 219, but expected. Continuing jobless claims coming in better than consensus and a drop from last time. We have Logan speaking. We have a 4-week and 8-week bill option. We've got Goolsby speaking. By the way, tomorrow we got the PPI and the consumer sentiment numbers. So those have been important recently, so it's going to be interesting to see how those react. The heat map today is pretty red on this pullback, but after yesterday everything being green, every sector pulling back right now. Fed Watch still has a 1, 2, 3, 4 cuts priced back in this year. Fear and greed, we're still in extreme fear. Watching for it. I'm really paying attention to the stock price breadth on the next bounce. Schiller PE ratio, after getting down to like 30 something yesterday. Remember, this only records it really on the weekly basis, but back to 34. So with that jump, increase of 3 points in the Schiller PE. Now, good morning, John. So that's what I'm watching, this pullback. Those next two targets are 56.30. I'm really paying attention to this area right up here, because if we get through the rotation zone, I'm really paying attention to this next key area. We remember this is prior to all the breakdown area, and we could see a return to that 50, the final target, and even the 200 to kiss the 200 goodbye again. All right. And with this increased volatility, if we do close above this 56.66 on the daily, I need to follow through on a weekly close for me to really tip the probabilities to a retest the high area in that 87.5. Because of the increased volatility. All right, NASDAQ, same thing here. We had the double. Boom. Completely, that's why I left that up on the chart. You know, turning into a front run pattern. And now the NASDAQ also closing right through the first target and against the rotation zone. Just above the bottoms. And just above, if I raise this to the candle, oops, what thing did I move there? There we go. Just right in line with the candle bodies of the breakdown zone. So, same thing here. Watching for where we have this little support shelf into the open. Little mini double, actually, also. Keep that in mind. But if this breaks down, if we break down below the support shelf of about 18,720, I'm watching for the potential pullback all the way. We could even pull back, around 18,250. I'm still watching for a rotation moves up. Again, this does not have to happen today. We could pull back, form a basing pattern. After this move, we're digesting it. Also, this is just turning into a flagging pattern, pulling back down. The next targets, we have only hit the first target officially, so it's definitely a stop raise. It did not go through the invalidation points on the S&P, but you're going to want to take it back to the lows. Coming up here, let me change the color. All right. And we're going to, the farthest away that would invalidate is the 62.5. So that's a fair way down. I mean, the key level I'd be watching is really this 50 level on any pullback, because that would have, if we did extend, that would have broken below this spike high from Monday and this key high area from Tuesday before the pullback that set up that little mini double and the bigger daily double. All right, next two targets higher. Next two target areas higher. You have this 19,580 and then there's roughly 20. It's roughly 20 right in there, because I'm watching that 50 also. And if we do break through there, I'm keeping an eye on the 200 if we were to kiss that goodbye again. Keep in mind also, we're coming out of very oversold conditions on a weekly basis. And all three targets could just simply return us to a rotation zone on the weekly before the next potential rollover play. Does the next potential rollover play have to take us back down to new lows? Not necessarily. But we'll be watching for that. We will be watching. Again, we're not trying to predict. We are attempting to trade. All right? We're attempting to find the setups. Like, we couldn't have predicted that, although based off of the tweet, great day to buy, or I forget what the exact thing was from Trump yesterday, which I'm not going to comment on that, but you couldn't, we had the setups. The setups were there, and then it rolled into a bigger thing. Does that always happen? No, but it happened yesterday. That's why you trade the setups, and then not everyone works. But when they do, and they do more often than they don't, then you have your analysis in place, and just like we talked about yesterday, it could be rolled into the bigger potential pattern. Dow, also coming up, first target, hit against the rotation zone and right to the prior breakdown zone. Same thing. Not going to keep repeating myself, but the key areas for the Dow is between about 39,475 and this 39,900. All right, targets higher 41,724, 42,416. It was crazy. I mean, I was shocked. This is a great day to buy. Then within a couple hours, I'm gonna pause the tariffs. If you did that as a Wall Street firm, had that much power or said something like that, and then said, hey, we actually have market breaking information that we're breaking, you'd be screwed. Wow. Or if I, said something that I had inside information on a company, and I said, hey guys, on this live stream, let's all go buy this morning. And then 2 hours later, the company makes this major announcement and the price goes up 9%. There'd be issues for me. But that's the time things we live in. The Russell is the weakest of the bunch again. I mean, it had the huge rally yesterday, but didn't even get back to the major breakdown zone. And we did not, remember, this was a lopsided double that wouldn't have even triggered on the close. That's why I didn't put up here. It was way too lopsided. So the probabilities are really a lot. They're actually below 50% on this one. And from all the testing I've done. And we didn't even trigger it. So just watching for the pullback. The key level on any pullback for the Russell's 1828.9. By the way, if the Russell does get through yesterday's highs over the next couple days, this is where... which is lower here? I forget. 17.91, 17.711, 709. So this is the lower. So here's where we'd use just a harmonics. Okay. And so if we get through yesterday's highs, I'd be looking at 1978. If we follow through that, this takes us just slightly above the breakdown zone at 2007. And then there's still a gap here. So those would be the targets I'd use. The VIX, by the way, also yesterday, we had the little double. Again, just coming back down. So that was the warning. So that was not something I was looking to trade, but that, as I mentioned yesterday, I was watching the pattern in that, which reinforced and now actually has triggered officially the double top. The double top you see here, the 4-hour double top. So that's why I'll be watching for a continued decline in the VIX over the next few days. My next warning sign also is if we close back below 33, which is the 62.5. Again, technical analysis can be applied to the VIX. The DAX, again, coming up into the rotation zone, the DAX actually running up, confirming, and then dropping back down. So where do we sit? That was a weird closing print on the DAX yesterday. I have to look into that more. But did anybody see the copper? Copper was very strange. I actually talked to Jim after copper closed, and he was going to go down and find more information on the closing print and let me know today. So, because it was and I'll show you in a second. The notes look barely a budge with that CPI. So, is this pattern yet invalidated from the head and shoulders? It's looking like technically it's not. Technically, it's not. If you're using a fail-safe trendline concept in this one, it's not. I'm using the 62.5 rule, 109.27.5. If it closes back below there, the remaining after hitting the first target on the notes would be done. I'm leaving it on here for the time being. Look at this, the yields. spiking above the 62.5 but closing below it, still technically the pattern isn't playing. I talked about why I lowered the stop a little ahead of the first target because the note futures had already hit it. The micro yields had not, but the note futures are a little more important than the micro yields. So, what did 2-year do? Interesting with that inflation print, the 2-year. No, I don't see where it is right now. Why is my 2-year not printing? Oh boy. Dollar index. We're in a potential. Remember, the trend is still down. However, we are in double bottom territory. We may just break lower. The next major target is this 99.80. The next minor target, which would invalidate the double, is 129. Other than that, we are in double bottom territory. Just pointing that out because if we did hit that, because the euro is also against the very key topping area, we could see a shift. But right now, the trend is still down, like the trend is still up in the euro. If I bring up the euro, you do have a potential double top in here too. May get invalidated before it ever triggers. But that's the only thing that shifts it from euro up in bullish mode. And remember, the euro is also in a very key resistance area. Look at all the tops up here. So I'm paying close attention to see if this does trigger. If it breaks out higher, then it could continue to run, but that would mean the dollar would be getting a huge smackdown. What else? What else we got? The crude. The crude coming down yesterday, bouncing off the key harmonic level back to the rotation zone. I'm now watching for a more significant bottoming pattern down here. We don't have one yet. Gold triggered a percent B buy yesterday, a weekly rotation zone buy, and followed through now. Now gold is in potential double top territory. Not saying this is ever going to trigger because the trend in gold is still up. One thing I just want to point out, remember, we are still very overextended on the monthly. That's why I'm still paying attention. And today it looks like we're finally going to close above that 62.5, which was the first target thing I listed on. I think I talked about that here, but I also put it on Slice. So I'm going to watch for this to return to make a stronger double top pattern. If gold does break out higher, your minor target is 32.30. Your major target is 32.60 area. Copper, this is what I'm talking about. Look at this fight here. Let's watch this going into the close because we have a confirmed double on the 5-minute. Again, this is a daily pattern, so I was waiting for the daily to see where the daily closed at. But look at this. So we were trading at 4.46, 4.47 area, and look at the settlement print. Look at the settlement print. It was down. The official settlement print was 4.19. Here was the high. Here's where it confirmed a double, and here's the settlement print. Completely bizarre. I mean, that's not a little discrepancy. So I want more. I'm hoping Jim can get some more information on that. So based off the settlement print, it's technically not triggered. It is against the rotation zone, so still watching. Now, because that was such a wonky settlement print, if this does rotate back up above 4.47, I'd be looking to get in it and then see how that the next day closes. So I'm watching this on a break now above here, but that was a bizarre settlement. All right, so the double is confirmed and not technically triggered based off that settlement price. So we had a massive move. I don't remember what the exact percentage was. But remember, I talked about this also. Go back to 08. Go back to .com. You get, if we may still continue to pull back, I would not be surprised. I don't think we have a long-term bottom, at least not based off valuations. This is a short-term tradable bounce. Okay? The bounce could even take us to retest the high areas. But valuations still haven't reset. And if let's say we are going into a longer term bear market, you're going to see many of these rip your face off rallies. Some of the biggest rallies happened in 2008, happened even during the Great Depression, where the stocks kept going down. But everybody tries to grab the bottom. You get these mad rushes. You get also people who are short covering when news like that happens. So you get these huge rallies in down markets. Who cares of who's they? I don't think anybody cares about this going on. I will feel a lot better about the market if you can explain to me how this keeps happening. This trade was 50 minutes before the tariff announcement, SPI 1.2. Yeah. Because guess what? We're in the golden age of fraud. We've been in it for a few years now. The rules don't matter, especially to certain people. Again, you see so much market manipulation, but guess what? We can't worry about that. We have to trade what is. We have to trade what is. Okay? And a lot of times patterns form because of these like investments that are done ahead of announcements. Okay, so you already have the pattern. That not every time, but a lot of times we get the patterns and you trade what is. And yes, you know what? There is a lot of garbage going on, but I can't fix that. Nor, you know what? I hope at some point it clears up. Yen, we don't have any double here. Just watch and remember, it's still the magnet price in the yen is 140, 199, so 142. Spiders. You see here, 4-hour double was a 1-hour double. Also, little tough to trade on the spiders, but based off what the futures did, but that was completely valid in stopping at the first target. So again, the invalidation point on this. Let me change this one. The invalidation point is still all the way back at 506. Would I be carrying a stop that far back? No. But the key thing on any pullback on this, I'm watching the 1-hour rotation zone on the spiders. And going into the open, I'm keeping an eye on some of this key area around 530 on any pullback. You can even watch the 15-minute rotation zone. But the first target was hit on the spiders. Look at that bar. Look at that bar. That's a weekly bar so far. But that daily bar, massive. There's your cues. Same thing. This did qualify for the double, triggered, and then run. And the cues hit the first and second targets. Okay. So technically the invalidation point is roughly 427. Now, if we started rolling over, breaking below the 4-hour rotation zone, which doesn't even have the first cross on here yet, then I would not be maintaining a stop all the way back here on longs. But the longs are still easily in play even with this pullback. Bitcoin, also, little mini double bottom pattern triggered, no first target hit yet. What does this mean overall in Bitcoin? Not much. It could take us back to the higher end of the consolidation. Remember, we hit the second target forming the double bottom right here. All right. So that is still on any pullback in Bitcoin. We could easily see still rotations back up. All right. What else? You still have your high yield just pulling back a bit. I'm still fascinated on this 10-year. I'm sorry, I'm focused on this 10-year because even with this in the CPI, the 10-year is not pulling back yet. Well, I mean, the usual Wells, Nancy Pelosi's tracking accounts have all been over it. Yeah. You want to talk about somebody trading off insider information. I don't try to make this political, but come on. Pelosi's like one of the best traders ever. I've dedicated my life to this, and there's the odds of it's just like Hillary Clinton back in the day with trading cattle futures. Cattle futures are notoriously hard to trade, especially back in the old days because they were some of the stuff that went on in that pit was highly suspect. Okay? It was a good old boys network. And her coming in to turn like 10,000 into 100,000 and then fully quit in a matter of months in one of the toughest futures markets to trade. Yeah, it's been going on forever. But people only care about it when they can use it for their political advantage. And then once it shifts back the other way, they nicely forget about it. Hello, Christoph. How have you been? You might want to go watch some of the replay on this one. Hope you're doing well, Christoph. Thank you for tuning in. What else do we have? Just for those Tesla, for the Tesla fans, it was yesterday a %B buy. This little pullback does nothing to invalidate it. You still, if you're looking for the bullish thing in Tesla, there is still a weekly double bottom. Okay, it is not triggered yet. But for those Tesla fans out there, that is still the pattern. So we'd have to see if this daily %B buy rolls into now. In Tesla, there's a lot of overhead resistance. If it were to trigger, though, look, it's finally back above, and it has to follow through on a weekly basis. It's back above the daily 200 and the daily 50. Not saying that there's a lot of overhead resistance, so this may not trigger. It could roll back down, form a triple bottom, but that's still potentially in play. Oh, I agree. And again, this is chaos. And the volatility, you know what, this is not helpful. Again, this is not a political statement. I'm just talking about the constant back and forth. You don't know what's going to happen the next day. It makes it very tough for businesses to make decisions. Like if you're making decisions, okay, tariffs are in place. Okay, now they're paused for 90 days. You're trying to make business decisions, and you're trying to make decisions based off your hiring, firing, capital investments, and you don't know what's going to happen the next day. So it's not just the markets. This is a very tough environment for businesses, and that's one thing I don't like, because businesses need to plan. Thank you, Christoph. It would be good to see you if you can make it in. All right. So we have the market open. We have the 4-hour rotation zone. We're trading against still the little key support level right now. So that's what I'm watching. Let's see where the tick opened. Let's see. Tick opened pretty negative. Wow, that's a very surprising tick opening after yesterday's. But minus 1,600. So again, watch on the tick bounce to see if this support level holds. If it doesn't, going to be watching if we break the support level. Then we will go watching for the pull into a bigger pullback. All right. We're also right now at the bottom of the 1-hour rotation zone, so that's why if we do break below this, and don't try to trade this as a head and shoulders, please. Then I'll be watching closer to the peak that triggered this. Yeah, we do have to trade what it is. That's all we can do. That's why we also analyze both sides of the market. We have to know. You can't just say, oh, based off yesterday, I'm going to just be blindly bullish. No, I have to know where the invalidation points are. I have to know where key support points are. And then I have to know when I'll shift back to neutral and where I'd shift back to bearish. But based off, I got to still trade the probabilities. Now, remember, also on these doubles, what's the rule? It's slightly lower probabilities when they're against the rotation zone, and these are against the rotation zone. But I am going with, because as I said, the price action on Monday formed a basis for a capitulation bottom. We then pulled back on Wednesday and then formed a bigger potential double, which is now triggered. So I still have to trade with the probabilities even with this pullback. With that, doesn't it add to big unknowns to patterns over longer time periods? Well, patterns still tend to play out. You know, there's always unknowns. The volatility, actually, that's why I like the longer term patterns better, because you have wider areas before they're invalidated. So the day-to-day volatility you don't get shaken out. I mean, on a 5-minute pattern, you can easily get shaken out with volatility. This, remember where our invalidation point is. What was it? I mean, the invalidation point, we can have a lot of volatility without this being invalidated, right? We could get some pretty big volatility because technically the invalidation point is back to 5,093.25 on a closing basis. So could you get some more wild swings back and forth without invalidating the rest of this pattern? Yeah. All right. You are welcome, OD Green. Thank you for tuning in. Good. That was a great question, David. And that's my answer. That's why I like to focus on the 4-hour. Yesterday, the 1 hour was good. We already highlighted that, but generally the higher time frames, and as I've said before, with volatility where it is, you got to trade smaller size and use wider stops. And people are like, oh, I got to use wider stops. Well, I'm risking more. No, that's why you reduce your size. You reduce your size so you're keeping your risk in line. And even with reduced size, when you get these oversized moves, you can still make a chunk of money. But you got to follow the patterns. And you also have to accept you're not always going to be right. Yesterday was a very nice day, but it doesn't mean every pattern's still going to work out. Okay? That's where we sit. I hope, let me just peek at the NASDAQ. Again, I hope everyone has a wonderful day. I hope what's more important to me is that you're alert with this volatility. It's not even about making money. It's about learning something. That's why I'm on here every day, because we can't just go and pretend and say, you know, we have to do this real time. And the videos are archived, so you can go back and rewatch yesterday's. You can rewatch Mondays. You can rewatch Tuesdays. This has all helped solidify my trading. That's the point of it, Jake. And that's why I'm doing this. And then if it's made a difference in, if this has made a difference in your life, then with what you do best in your life, with what you excel at, then I hope you can help other people who need help and excel in areas that you are really good at. So pay it forward. You're welcome, Anissa. Hey, Heinrich, thank you. Well, that's what happens. Mistakes come less and less frequent, and you need to learn to trust the analysis. The analysis, you know what? Does every trade work out? No. But like when I had the last product that I did with Bob, the stock think tank, we tracked our trades. They were put out, and I think I had a 83% win rate. That's pretty good? That is pretty good. So is that 100%? I'm happy with anything above 70, honestly. Is that, you know, you're not going to get 100. You're not going to get 95. There's going to be like the move yesterday. Like, okay, we're pausing tariffs. There's no, I mean, some people might have known about it. Just saying. But if you didn't know about it and you didn't have a pattern, let's say you were still short, you're going to take a loss just because that was an unpredictable event. That's where people, I'm looking for a 100% system. It's not out there because anything can happen in the markets. You can get shock announcements. You can have stuff surprising, okay, that can't be planned for. You will not always be on the right side of a trade. That's why you always have to manage your reward to risk. You're welcome, Harold. With that, I got to wrap it up. It's slice like the think tank you guys used to do. Haven't had a chance to check it out yet. Yeah, well, it's myself, Jim, and Bob putting up our thoughts. I cover some stuff on here, but it's also Jim putting up his trades he's executing, Bob putting up stuff he's watching on stocks that I also work on too, and other stuff he talks about. So it's more of, you get all three of us putting in our thoughts and stuff we're looking at and stuff we're doing. So that's what it is. I'm not trying to push it. I'm not trying to sell it. It's just a collaboration between the three of us for people who want that kind of information. Other than that, this daily stuff will remain. You see it. It does not charge anything. There's no charging for it. It's just, hey, here's the information. Learn from it. With that, I shall talk to everyone later. Have a wonderful, wonderful trading day. Remember, PPI tomorrow morning and then Michigan Consumer Sentiment. We still have some Fed speak. And we still, who knows what'll come out of the Trumpster's mouth or tweet next. So we can still have continued volatility. With that, I shall talk to everyone later. Bye for now.